Hello and welcome everyone to day 4 of the Leadership Mastery Bootcamp. Uh, I've been having a lot of fun with all of you, and I'm sure you're enjoying too, based on the feedback that we have been receiving over email and LinkedIn DMs and WhatsApp and what have you. So I believe this is beneficial, and I believe it is uh, helping you grow the area under your leadership curve. A lot of times we all grow really fast, but there are a lot of different lessons that still need to be learned to sustain that curve. And I so hope and pray that this 5 day boot camp is helping you with the worksheets, with the different things that are being shared, different topics that are being covered, and the amazing experts that we have on board who are coming up and sharing their amazing wisdom and journey with you, and who will also be part of the Lead with Ease Academy when you enroll. And you will get their expert mentorship and guidance. So, today we're going to talk about strategy, crisis management, decision making. And for those who have registered, you've already received your worksheet for that. Things to introspect, things to think about, tips, etc. All the education and the knowledge for that, and I'm going to cover that in the later half of our session today. But to talk about strategy, decision making, and crisis management, one of the best people I know is Mukesh Goyal from Kansas. And I'm just bringing him on screen. We just heard his better half yesterday, and we have Mukesh Goyal here today. Welcome, Mukesh ji.
Hello, nice to be here.
Thank you. Thank you so much. I was in Kansas in November, and one of the things I heard over there is that he is, even the Americans call him as the Mukesh Ambani of Kansas. Is that right, Mukesh ji?
I
Yes. That's what I heard from the buzz in your neighborhood and
Mhm.
a friend circle. So Mukesh ji moved to Mukesh and Sangeeta ji. They both moved to the US in 1997, and over the last so many years, 27 years, they have built a beautiful family, built a beautiful community, supported many members of their family, and received their support as well. And they have built many different businesses. So yesterday, Sangeeta ji talked about uh, how did she manage everything together along with a full-time job, and also engaging the next generation and in the family business. And today we have Mukeshji. We're going to talk about crisis management, decision making, strategy, and so on. But a little before that, I'd love for all of you to hear about Mukeshji's journey from 1997 until now. He did share some very interesting nuggets, which before, like when we were in the studio, and they're very interesting, and I'd love for him to share them with you. So, Mukeshji, you came here in 1997 as a software tech person.
Yeah, actually, I was not even I didn't have any software degree when I came here. Actually, I learned here, and then I was basically a business analyst, but I learned the coding part later on when I came here. So so my I worked 10 years in the software industry here without a degree. Just learned myself and able to do it.
That's just a spark of your splendor based on what I've heard. So, then when did you start your first business venture? When was the first
It
investment
was
you
in
made?
2002. Uh, I started with the real estate and get the real estate agent license and basically buying the properties for renting, investment, and have few people who, there are always everybody in the job want to do some business, but they are like fearful of, doing it. So I took the lead and people started investing with me, and that's how I start building the my real estate portfolio. And then I, like around 2004, I've been hearing that recession will come in the real estate, so I kind of got a little scared, and everybody
Hmm.
was saying that commercial properties will be much better than the residential.
Hmm.
So I thought of that, and somebody listed a gas station for sale, and I just bought it, thinking that that will work for me. But
Right.
that has been a lost deal. I lost a lot of money in that, continuously losing that money, which prompted me to, go much deeper into this and try to understand the business. And
A-
then at that
And
time,
while you were making a loss on the gas station and
mhm,
the real estate, the recession was looming large, you
yes,
decided to also
correct.
quit your job at that time.
And then I quit the job. I said, well, I have to go full time. Otherwise, I will not be able to do it. So quitting that job is a big decision. Even my father-in-law was saying, "Are you crazy? What you're doing?" I said, "Well, you know what? You can't put you can't be double-minded if you have to decide it which way you want to go." So I took that risk, and that was a good risk.
And
But
Sangeeta ji had her job till like a few months, like till some time back.
yeah, she had the job. But she also quit the job later on after a few years. Or
Yes, for the
uh,
children.
so yeah, because of the kids. But that was a good time because then there is no way to, you know, you have to give a full effort to the business, and you have to take that fear out of your mind, brain, heart, that fear of failure. Once that is out, then really the real results comes in.
Right. So, but to
That's
quit your job when your business is making a loss, that's a bold move. That's a bold
well,
move, Mukesh. Not many
it
people are
was
able to do it.
the thing which I realized that the reason business was making loss because I was not able to pay full attention to the business because of the job.
Oh,
And
okay.
once I start paying attention and everything full time, then it turned around. And but yeah, the story is that I made so much loss in that first gas station business that I quit the job and learned it very well and actually bought more gas stations too.
While you were in the loss, but
Yeah,
you
why
learned
not?
it so well and you bought more gas stations.
Yeah, because now I know where the losses are, so I probably did the right deal next time. That's what the
Right. And you also found some fault with the supplier that benefited the entire Kansas
yeah, I figured that
industry.
out that they were basically ripping the money and taking the advantage of. There are a lot of people who are so in the gas station and liquor store, like in this retail business, a lot of immigrants comes in and they buy the business. They basically buy the job. They don't know anything. They basically buy the job kind of scenario. And so the suppliers were taking full advantage of them with lack of knowledge, which I figured it out, and that has helped me a lot and helped other people, other businessmen around here. And that's how I built my reputation. That yes, something can be done collectively. So that's how I learned that business, getting insight into that. And, and later on, I was able to actually establish the wholesale business also.
For
And
gas.
basically, I did the kind of a vertical integration and I bought the fuel transport company also so that I have the control over everything because fuel is quite sensitive price wise. If you have the control, you can make different and you can compete with the big players.
So you had real estate property investments, you
Uh-huh.
had multiple gas stations,
Uh-huh.
plus you became a wholesale supplier of the fuel, and plus you had a transport company for the fuel. So you had like basically all the pieces together, and so that
Yes.
you could be less affected by the prices.
Yeah. Yeah. And the real estate also, I realized that some vertical integration can be done here. So I started, I went into developing the uh, real estate, and that business has because real estate is like when you buy something just from the market, probably you pay a high premium. So I
Hmm.
realized why don't we start building it and developing the buy the land and develop the properties, which have better control over that. Same thing I did in the gas station business. Then I started building the gas station from the scratch. So I start buying the land and building the gas station to understand it fully. and
Wow.
that's how the real vertical integration has been done.
Right. So you're like you're not you just don't want to be a consumer of the business. You want to be the business. So
Yeah,
whether it's real estate,
yeah, creating the business, basically creating the things, and then
yes.
I also bring in because of that, because they're all in my friend circle. Everybody wants to do business, but that fear of failure has, kind of stopped them. So I basically offered them, hey, you can quit the job and join the business. And actually, I did bring a lot of people in the business from software industry.
So you never thought of having a software business because a lot of people want to make like have their startup and get VC funding and then have that software business going on. You never felt attracted to that?
well, well, I did invest in some startups and let them do the thing, but I enjoy more on the traditional business side in the real estate, and that's where I like more. Or the fuel business, and real estate is the one of the best thing because, and also I'm involved in the financial market. So uh, actually, I started my career long time back in 1980s in the stock market. And so I used to go inside the ring and used to do the floor trading for the broker,
Wow.
and which I stopped doing when once I came here in USA. But in the COVID, when there was nowhere to go and sit around, then I again started doing the stock market also, which actually working good also.
So you have diverse businesses going on. You have real estate as in, homes that, rental properties, but then you have also invested in you have apartment complexes, you're also a land
Yes.
developer, you also partner with home builders. Tell me more about this apartment. I think you were mentioning it's based out of Houston or in
Yeah,
Kansas also.
so there's this company, a young guy named Swapnil Agarwal. He started the business in 2014. It was a startup, uh, and he needs the help at that time. But I liked his ideas. Even he was a even I think so. He was not even a citizen at that time. He was about to get a green card. So getting a loan from him was quite difficult. So I sponsored him and getting the loans and all that. But he has the right approach and he does a lot of growth. So I helped him and I raised a lot of money for those projects. Um,
So how do you raise money? How do you raise money for these projects? Is it you put your own money or how do you get those funding going
the
on for these
private
entrepreneurs?
investors, because somehow I don't know why the people start trusting me. So
Or you
so
have the certainty, you have the executive presence. We've been talking about that last 3 4 days. You have the track record, and that's why people trust you.
yeah, because whatever you do is need to thoroughly study that thing, and figure it out. And it's not that difficult these days, especially with the availability of all the information on the web. You can
Mhm.
do extensive research on anything these days, and that is why
Right.
as this young generation is we say that some bad things about the young generation, but the best thing is that they do their own research quickly. They can find out anything from the web, and
Mhm.
that's why they're much advanced.
So, what tip would you like to share with upcoming entrepreneurs or well set entrepreneurs also to be able to run businesses in diverse verticals? Uh, Diverse businesses, but they're kind of interconnected, but it's still a lot of different things that you're handling. So, what is that one tip you would like to share with them?
Well, these days there are a lot of opportunities available, and the opportunities are actually available all the time. It's just you have to open your open mind. Uh, if you look at it, the young generation does not want to go into the traditional businesses like
Mhm.
retail and all that. Everybody wants to be the next Bill Gates or
They're called as a
Amazon.
boring businesses.
Yeah,
Traditional businesses are
exactly
called
right.
boring businesses.
So there is a big vacuum there, and there's a lot of money in these businesses. Uh, if you look at those things, uh, if your goal is to make money, I don't know, people have different goals. Some people say, no, I don't like this traditional business because uh, I want to be a CEO of a big IT company only. Well, how many people can become a CEO of IT companies? So not everyone. So, but these traditional businesses have a lot of scopes and a lot of money, and they are sustainable because imagine that if everybody thinks that everything will be online, is not correct because people still have to go to the physically to buy something. I understand that the fastest growing is the online business, but there's a limit to that, certain limit. So, and then the new generation, it does not want to go into that business. So that opens up a lot of opportunities in that field. And that is good for the startups, when if you want to start your first business because you want a good cash flow.
Hmm.
And these traditional businesses are generally very good cash flow. And local banks actually prefer those businesses, and getting financing for those business, especially for your first business when you are an owner operator, is much
Hmm.
easier. Generally, you get the from financing from the local banks at the reasonable terms, and
Hmm.
that's a good way to start the business because once you get into that business and quit your job, a lot of opportunity opens up, and you can do anything actually after that. But
Right.
starting with some traditional small business is a good idea to do that.
Right. Uh, I'd also like to ask you a question on the value of community and relationships as you build your businesses. Um, what would you like? What is your take on that? Can you like just grow it in isolation, sitting on the computer and talking to people, or what is the value of building community around yourself?
The community value, people generally, if you do a business and do something, uh, it's suppose a lot of people watch you and they will come to you how you started it. If you give them the right knowledge, right thing, they will start following you. They will even offer because a lot of people sitting doing job for their entire life, uh, they realize that keeping money in the bank just gives not enough. So people want to take a little bit of risk on the someone else's shoulder. And you can find a lot of people like that, and that's how you can raise the money for a bigger projects. But if you are honest and give them a return, because making money for yourself is easy, but making money for someone else is the difficult thing. But once you do that, uh, they will chase you like crazy because making money for someone else, is the best thing to make your reputation and expand yourself.
So you build a community based on one thing is you put in your own effort and you grow what you're growing, but then you also build community around you because you help those people in what they want to do in their businesses, and then also make money for them, and that's how you attract a lot of personal investors and
Yeah, private
private
equity.
investors.
Yeah, private investment comes with your track record basically. Once you are successful and make money for others, there is no shortage of money. There is no shortage of capital. You really, that's where you open up yourself for bigger things. And another thing is that to understand the financial system, and it's everywhere is same thing like that. This financial system only wants to give money to the rich people, or the money to the people, you know who are established, or something, or
Mhm.
who are making continuously profits. So that is why the entry point is hard for getting the initial capital from the system, from the institution. And
Mhm.
that's where the private equity is very useful in establishing the business because you don't have to go through that system. But once
Right.
you establish something and you have something to show, then system really works in your favor. So, and it really works. I have seen a huge difference. Like if you're starting your first business and you approach a bank, you find all kinds of problems. They will ask you to put 30-40% down and give you an interest rate which is much, much higher than the market rate. And same
Mhm.
thing if you're established business like me and if you approach the bank, they say, oh, okay, just bring in 10, 15 or 20% and we will give you the loan. The difference is quite a lot. And that's why it makes a lot of business to fail because of the way the financial system is, because it doesn't help the newcomers at all. And
And
that is.
I remember one discussion I had with you in January, and you
Mhm.
were very patient to spend time with me at that time as I was learning things from you. One of the things you had mentioned was like I had asked you a question that when you take funding, like investment, like loans from a bank, the interest rate that you pay is much lower than what the returns that you give to your private investors. And you had a very interesting take on that at that time about
So
risk and community.
yeah,
You mentioned some things at
so
that time. Love to hear that again.
that is what the mistake a lot of entrepreneur makes. They don't want to use the private equity because then you have to give uh, a share in the profit. And they
Uh-huh.
said that if you take a bank loan, so it is at like 6%, 8%, and that is a fixed cost versus if you give a take a equity and give a profit share, and if the business runs very successfully, then you regret. You say, oh my god, now I have to give so much of money to these private investors, although I'm doing the work. But think the other way around. uh, Other way around is that uh, every business has its downfall and ups and down. In the downtime, bank interest, anyway you have to pay whether your business is making money or not making money.
Hmm.
In the case of profit sharing, you share your profit only when you make the profit.
Hmm.
So in a downtime, when there's a recession, this then you realize, okay, I don't have a burden of
The bank
monthly
loan.
payment because it's not making a profit. You can tell the investors, hey, we are not making profit, but when the things will turn around, you'll make the profit. So that helps in your uh, financial position. And a lot of bankruptcies happens just because uh, you have over leveraged yourself with the institution, financial institutions, thinking that
Uh-huh.
you can make more profit and everything is very profitable. Why should I take a private equity? But if you take a private equity, so you will not get bankrupt. Things will only slow down and people will not make the profit. But when the things economy is good, it turns around. Everybody will make the profit, and you can sustain your business for a longer term and more stability. So those are the things.
Thank you. Thank
Taking
you for
private
sharing
finance
that.
versus the.
Right. So talking about, as you mentioned, the ups and downs in business, and you have like really expanded things when things have been down, right from when you started your gas station to, all of these things. You quit your job when your business was making a loss, but then you went in, turned it around, and things like that. So you have a risk appetite that a lot of people are unable to have. And you have certain intrinsic qualities around crisis management, which a lot of other people may struggle with. So, what tips would you like to share with them? Because my image of you is a very calm person.
So here's the thing. Uh, Without failure, you cannot learn, and that's how you raise your kids. So when kids are learning to walk, they fell down, and what is your thing? Oh yeah, you fell down. You will stand up, and that's how the kids. That kids learn the things. The same thing applies to the business. Until unless you try something, it did not work out. At least you know that, oh, this way it doesn't work out. So then at least you eliminate one risk, because
You
every
pay it
failure
for
actually eliminates the one risk out of it, of your success, because uh,
beautiful.
that's
Every
how you learn.
failure eliminates that one risk from your success.
Exactly,
Beautiful.
because you
Very
learn
well
that,
said,
that
Mukesh ji.
if you do this way, it's a failure. So try the other way around. That's how learning process is. So that's why I said fear of failure is the most reason that people don't come into business. I mean, so they all their life they have that dream that one day I will have a business of my own, and then I don't have to report to any boss. But that's how they retire, having that dream all their life because they have that fear of failure.
And
Failure is not a good bad thing actually.
I love how you framed it. You said that every failure
Yeah.
eliminates that one risk from your success.
Yes.
Amazingly well said, Mukeshji. So it's like an education you're giving yourself by investing in that, which no
Mm.
college education can give to you.
Exactly right. That it's very correctly said. That's how it is actually in actual business life.
So how what tip would you like, so a lot of people, I think they're unable to take risk because they're thinking about safety, and security is important to them, security for their children, their family. They may have a lot of dependents and all of that. So what tip would you like to share with them to take that risk? You did those bold moves, and your journey. Another beautiful thing about your journey is that it's a real journey. It's not a social media polished journey that, hey, I was always successful. You're very honestly, openly sharing about the ups and downs and the things that happened and how you learned from everything. So, what is that one tip you would want to say to people to help them step out of that whole risk, safety thing, so that they can step into something bigger? The
So
possibilities that lie
so
outside.
start one small step you can take is that if you see an opportunity with someone else to privately invest some money, uh, that opens up your brain. And because if you invest something, you will get those reports from those, you know, and you can study that's how they are doing the business. So,
Hmm.
even a small investment, by doing a small investment in any business, it's actually a learning fees like you are paying to a college. It's the same thing because if you invest, then you will be creating your interest in that business because you have invested the money. You will be asking the questions to wherever you invest. Hey, what's the position? What is the status of the business? And generally, they share the P&L and balance sheet with you. Hey, this is where we stand. Then you can start understanding the business. That's a one way of doing it. I'm not
Hmm.
saying the like if you have a saving of like $10,000, maybe if you get an opportunity to invest few $1,000 into a business, someone else's business, that's a good
Hmm.
way to start doing things. Other way is around always investment properties is a good way to start it with that, where rent is generated. But sometimes what happens is that you hesitate because you see that, oh, there's no cash flow in that. Suppose if you buy a small duplex or something, and you calculate, hey, this much is the installment, this much is the premium, this is property tax, and this much rent I'm getting. I'm not making any money out of. Why should I do it? But here's the thing: if you do that, you will go the entire process of it, how to manage it,
Hmm.
how to handle the situations when something breaks down, or so that is a learning curve with a very small fees because maybe you will break even on that, but that break
Hmm.
even actually is giving you an experience that how the things work in the real world. So
So
these are some
basically,
small,
knowledge is power. So once you
yes, no,
understand
yeah,
something, then your ability to take risk increases.
yeah. And when even if you make your first $100 out of that investment property, actually you will feel proud. If it's, having all that problem, tenant was giving you bad time, you have to do a lot of repairs and blah blah everything. But even if you just made $100 out of it a
Hmm.
month, it's a very big achievement because then you really understand that how the business works, how the return comes. Because in a job, you just go there, do a job, and get a paycheck. Actually, besides, you're doing a very narrow learning there because a, a one small piece of that business has been given to you to handle, and that's all. You don't. have the bigger picture of that business where you are working, whatever company you're working. You're just working in a tiny piece of that.
Right.
That's all your knowledge is. But when you do your own work or your own thing, you get the knowledge of each and every department. Hey, how did the finance work? How did the bank give the loan? What are the information they were asking? You have to provide those. If you
Right.
have to rent a house, you realize this is a sales. So you have to do some advertisement or something, talk to the different tenants. So that's your another process of learning how to find a good tenant. And then something breaks down, then you hire a handyman or a company to fix it. And that's where you realize that how to handle the vendors. So in one small business there is each department of big business you are getting experience, because the same way the big department works, what you're learning in a small scale. So any small business can actually teach you the entire MBA course in just one business, small business. So when you
And
do
it
an MBA
helps you
degree,
overcome your own inner barriers also. Your as you beautifully said, any small business will give you many departments, or you're investing in somebody else. So it's easier for you. You get a window into it. And I'm also sensing that it helps you overcome your own inner barriers and fears gradually, in approaching
yeah,
people and
take,
finding
take
people and running things
exactly
on your own shoulders. There are a
take
lot
an
of
example
business
of
barriers
MBA.
too. Sorry,
Like
please say it.
like people do MBA and spend hundred and thousand of dollar to get that degree. What do they get from there? Same thing. So instead of giving an institute to learn the things and
Mhm.
get a degree, and after that you have to struggle to get a job based on your MBA degree. But if you do your own business, it's the best MBA degree you're getting for yourself,
Right.
because you're learning everything there.
And what is the place of mentorship? What is the place for, like, when somebody wants to start out their business or wants to build their business? What is the place for learning from other accomplished people like yourself, who are already doing well? And like how can one build that network?
Most
How
probably
does one
people like you
benefit?
can help and having this, that you're doing the same thing here.
Yes, and that's what we're doing with the Lead with Ease Academy.
Yeah, so
And you're going to be you're going to be doing sessions within that, and Sangeeta ji and Vinod and so many other people to help
yeah,
people
there
with.
are learning groups there. You can find like-minded people. Actually, there are like-minded people everyone has in their friend circle or something, but you just
Yes.
have to open up your mind and see who's the where is the positive energy there, and just stuck with them, follow them.
Nice. So community, like-minded people, starting small, taking that risk, either investing with somebody else or you doing something small yourself, and where you learn all the different functions of business, crossing your own inner barriers, and that's how one can increase their risk taking ability. Have I summarized it well, Mukesh?
Yeah, correct. And you will find in the society there are always small groups who are investing money in real estate in a group. Join those groups. I see it everywhere. Those small
Yes.
groups, and they are investing money together. That's a very good learning experience actually. And risk is spread in that case. If you two three friends go together and buy
Mhm.
something, it's a good way to start.
Right.
So
And you won't become the Mukesh Ambani of Kansas on day one, but you will in 27 years. So that insight is also important for leaders because they're looking for immediate results. But it's a
yeah,
journey that you build upon.
yeah. When there is a will, there is a way.
Thank you so much, Mukesh ji. It's always
Thank you.
such a pleasure to talk to you, to be around you, to see your wonderful, charming smile, and to learn. You say it so simply, but there's so much depth in what you share, and it's the depth comes from the experience and your own all that you have done. So thank you so much for being part of this.
Thank you, and good luck to you.
Thank you, and we will have Mukesh ji in the Lead with Ease Academy also, sharing his wisdom with people. Thank you, Mukesh ji.
Thank you. Bye.
Bye. And And I'm just trying to figure out a little bit here. So we got a nice MBA class from someone who has been running his business, who has been doing this for the last 27 years. And there is so much learning, so much depth in what he has shared. And he will be part of the Lead with Ease Academy on the inside. So when you become a member, there will be regular sessions with Mukesh Goyal, Sangeeta Goyal, Vinod Sujan, and other experts from who I know would be able to come and benefit you, and with whom I have a great relationship with. We'll also organize sessions by members who could come and share their different insights in a way to serve the members of the Lead with Ease Academy. And you will also get coaching. You'll get your accountability partners, your sounding boards, and coaching, not just from the experts, but the whole mindset piece that Vinod alluded to on day two, and that I have been talking about for the last 5 days. So you are going to get all of that when you join the Lead with Ease Academy, and a complete course roadmap to help you work on these different aspects of yourself. So this is your ecosystem where you can build yourself, build your business, build your leadership. If the same business skills and leadership skills are required, whether you are in a Fortune 500 company or you are in running your own business. So the cart for the Lead with Ease Academy is open, and the special founders launch bonus expires um, on July 12th, end of day Central Time. That's Friday night Central Time. So, for those of you who are interested, the link is there in the description wherever you're watching. It's bit.ly lead with ease. I also have the ticker going on. And I'll just try to turn this one off so you can read more clearly the slide. Yes. So so this is what we're doing with the Lead with Ease Academy, is to create this ecosystem, a development roadmap for leaders, complete with courses, coaching, community, and experts, where you don't have to go and figure out the wheel. You can learn from their learning curve and get the support and mentorship you need to reach your full potential as a leader in a major company, or to build your own MNC. And that's our goal here. And today's topic, as I mentioned, is crisis management, decision making, and strategy. So we've got a masterclass from Mukeshji on that, but we're also going to do a little bit of our homework, a little bit of our coaching, a little bit of understanding of core concepts as well. And that's what I'm going to branch to. So those of you who have registered have received the link to the workbook that you can use and follow as I share these different concepts that you can learn and coach yourself. And for those of you who don't have the workbook, too bad you didn't register on time. Anyway, this today I'm a little better prepared. I have slides because the workbook visual is not that great on this new streaming setup that I have. So here we are talking about strategy, and what is strategy and what is not strategy, and how can you build the right strategy. Yes. So what is not strategy? Strategy is not your mission and vision statement. Strategy is not your tactics. Strategy is not any of those things. I'm just trying to pull up the worksheet also, though I can't share both. But just for my reference, I'll have it right here. So it's not tactics, it's not your goals, it's not your objectives, it's not your rhetoric that, yeah, I want to do this and that's my desire and that's my plan. I knew someone who would just be so happy with that rhetoric, and I never saw it backed by action. Or it's not about how do I optimize my business, how do I save costs, how do I do this, how do I do that. Or strategy is also not about continuously focusing on just what is emergent. There is this new term that has come up in the industry which is called as emergent strategy. So it's basically have no strategy, just keep responding to the market, and that's your strategy. But it doesn't work, because you got to put your stakes in the ground, you got to dig your heels in at somewhere, and then move around with whatever is emergent. So some decisions and some choices need to be made. And I'm drawing from two definitions from Mike Porter, who has written a book, Competitive Strategy. And his definition is deliberately choosing a different set of activities to deliver unique value. So it's basically about making explicit choices to deliver unique value. And Lafley and Martin, They have written a book which is Playing to Win, how strategy really works. And I'm reading their definition, is where they talk about the same thing. It's about an integrated set of choices that uniquely positions an organization in the industry. And this can be a company, department, business unit that uniquely positions the organization to create sustainable advantage and superior value relative to the competition. Yes. So these are some definitions of what strategy is. Now, all of those things that I mentioned in the beginning, your mission, vision, goal, objectives, rhetoric, etc., they become elements of your strategy, but they're not strategy in themselves. And as you are building strategies, as you are building your strategy for your organization, company, department, business unit, your own self, is to answer these five questions that Lafley and Martin ask in their book that I just talked about, right? So now, what is your winning aspiration? What is it like that you really want to do? What is that purpose that drives you and that you see is going to help you win, right? And if you don't seek to win, there's no point in having that organization. There's no point in putting all that effort. There's no point in risking the money of the stakeholders. And there's no point in having people employed and doing things when there is no desire to win. There is no winning aspiration backed by purpose. The second question that Lafley and Martin ask is, where will you play? Yes. What markets, what unique niches, what channels, what product categories, which stages of the industry in question? Yes. And we were talking to Mukesh ji. He started his real estate business with an investment property like a lot of us, but then gradually he started connecting to verticals around it, and one of them was investing in others who were doing apartment complexes and things like that, and then getting into that land development, getting into the business, the source of the business himself, right? And that's how he figured his unique advantage and where he's going to play. Yes. And it starts small and then he's gradually building it up. Similarly with his gas station business, right? He bought one, made a loss, learned about it, invested in a few, but then got down to actually being also the gas supplier, the transporter, and so many other things. Yes. So he started at a particular place, learned something, and gradually grew confident and became more and more successful in that area. And he defined his where will you play. Now, the second thing is, how will you win? The unique value. And as we've been talking to him, and as you know, like, what is your USP to create unique value and sustainability and deliver value to your customers in a unique way and to yourself, right? So it's pricing, because he went back to the source and he even started building his own gas stations. Yes. So that's his unique value. It's like being able to reduce cost, being able to handle that risk, and to give that unique value to the customers. And in his case, his customers are also those private investors to whom he gives very high returns when they invest in his businesses. Yes. And then we're talking about what capability, and USP is also, what is the USP of your organization? Yes. What is unique about you? And can you, within that uniqueness, can you move around, um, and further play on that uniqueness, grow on that uniqueness, and keep building more and more products and more businesses? And there is a book that beautifully talks about that. It's by Jack Trout, and it's called Positioning. There are many examples in that book that can help you as you are figuring out this question number three. Question number four is, you've understood your winning aspiration, you've decided where you're going to play, how you're going to win, uh, all of that. Now, question number four is, what capabilities, activities, and competencies we need, right? Usually we think this is strategy, but these are elements of strategy. Yes. So what, like, if it's a software SaaS company, what are the capabilities you need? What are some of the capabilities you need is, great customer onboarding, great customer support, scaling, analytics, taking things ahead, handling the whole innovation piece, all of that. Yes. And being having your ear close to the ground, knowing what the customer wants next, and then building all of that in your SaaS. For a service based B2C company, it could be again very pristine service, superior customer support, superior customer relationship building, and so on. So, what are some of those capabilities, activities, competencies that you need is part of your strategy. And and again, they all pivot on the first three questions. And then the last question is what management systems that you need, because you have this great vision, you have this great strategy, this winning advantage, this USP, these capabilities, and this great product and everything. But how can information about that, how can the passion for that trickle through the entire organization? How can you get the entire organization working together in making that happen? How can um, these employees be trained to deliver on the choices you have made as a leader on those strategies? So plans have to be also made to sustain the capabilities, to grow the capabilities over time, measure the progress with your analytics, and make informed emergent decisions with as you're making progress. So that is a beautiful concept, beautiful definition and steps, five simple questions that Luffley and Martin talk about in their book Playing to Win, how strategy really works. And I thought I should introduce these to you as you build your own organization and as you build your own strategies. And the next thing is today's topic that we're talking about is talking about decision making, right? And Mukesh Goyal is seems very pro in decision making, and that comes from a very solid sense of self, a very solid personality. And as we've talked about on day one and day two, and even yesterday, we've talked about executive presence. Is and I'll get to that next stage, but it's your personality. And what is your personality type? We also talked about Ayurvedic personality types and what is your personality type. Do you like stability? Are you an earthy person, or do you like risk, or do you like fast movement? Which of these are you? Fire, are you driven by the fiery aspect? Are you driven by the air aspect or the earth aspect? Which of these are you? And you have to understand your personality type before you can fix your decision making, because a lot of that is coming from your personality type. And once you understand your personality type based on Ayurveda, you can see which inner scripts are in action during your decision making, what your needs are, and how your decision making is influenced by those needs at a human level, and what are the ways in which you can mitigate it. So, study of personality, very different. I've covered that, important. I've covered that in day two. The next is also your surroundings. A lot of your decision making is influenced by your surroundings, what's happening in the market, what's happening in the industry, but also where you're sitting, the place where your office is, the place where you're sitting, the type of people you're interacting with, how close you are to the customer, how close, physical proximity, how close you are to your mentors. And all of that also influences your thinking and your decision making. And that's something to consider. I've done two podcasts on this. One is proximity is power, and how location is important. So incorporate that as you're trying to work on your decision making skills. And the next thing is biases in decision making, which I'll cover a few of them. Though in the worksheet there are quite a few of them there. In right now, I'm just going to cover three of them to give you an idea. Right. So we have these biases, we have these filters through which we see things, we have some filters through which we make decisions. And I want you to consider some of these biases. One of these biases is an anchoring bias. An example with that would be that, say you're interviewing someone to join your company, and then they say that, oh, my salary expectation is $100,000, right? And um, and in your head you're like, oh, okay, so usually people for this job, they're not agreeing below 100,000, so let me just give 100,000 to this person. That person has been able to anchor you to that price point, and now you think that's normal, and then you pay the person, though there is a lot of industry, and when you do the research you'll figure out that the position payment for this position is $80,000, right? Now you are anchored by what you saw and what you heard, and then you think that's normal, and everything else is, you don't even consider it. This also happens when we see people, when we read reports, when we see certain businesses in action, and we see how they're doing things, we get anchored into that's the only way to do things, even if they would be making a bigger, they could have made more profits in how they're doing, but we just get anchored into that because we're looking for something familiar and we forget. Anchoring is used as a pricing tactic also. People usually will show you, the cheaper one, the middle one, and the most expensive one. And usually the one in the middle is the most popular one that they want you to buy. Now they got you anchored at the highest price point so that everything else looks relatively much more affordable to you in the process, right? So that's how anchoring biases work for you in your decision making, and something for you to think about as you are making decisions for your organization, for your teams, for your company, and the risks that you're trying to take. Confirmation bias is another thing. If we're used to something familiar, we're just trying to confirm that same thought. This is what one of the things that happened with the Katrina hurricane is that the mayor, Ray Nagin, uh, he had served, I believe, in Vietnam, and there he had learned one thing, that even if there's sign of danger, don't do anything until there is something really happening, until there is like you can see the shot fired by the enemy. Now, because he came from that, and that bias worked, in that war state, but not in the Katrina hurricane. There was all the reports and all the news and everything, but there was no evacuation plan that was planned during the hurricane, that was initiated, because he was like, let something happen and then we'll do something. There's a lot of fake alarms that happen, and unless there is something really happening, I would not do anything. That works in the war, but that doesn't work when may have worked in the war, but that doesn't work in where there is loss, right? In war, the way to protect yourself from loss is to see what the enemy is doing, right? But in a Katrina, loss is imminent, and you don't want to risk people's lives, and it's important to make those decisions even if there may be no hurricane, but there is every sign of it. That bias of his affected that decision, and there was so much loss of life. And I was in 2005, I was in New Orleans. I have some family there, having a good time with them, meeting everyone. And then I left, and within 3 days there was this massive hurricane. And because I'd been there, I'd seen all of it. It just felt a little bit, hit me closer home. Now, another decision bias is the sunk costs. It's like throwing good money over bad money, right? My grandfather used to call it, in Hindi. He would say, "Dhan ka ku dhan kar rahe ho." It's like you already made it. You made it, and he would say it in business, but he would also tell in the context of running the home and the kitchen. It's like you made a dish and you burnt it, and now you're adding more butter and more spices and everything to fix it. No, but it's already a sunk cost. It's gone. Cut your losses, move on, make something different. Instead, use your resources in creating something different. And because of this sunk cost, because you feel already invested into a decision, you feel already invested into a pathway you have taken, and it's not giving results. And there, a lot of times, leaders are not able to understand whether they should keep putting money, keep putting time and resources to fix this thing, or whether they should just leave it, cut their losses, and move on. Yes, and that's something that a lot of us need to work upon as sunk costs. And then there are others that I've talked about, and I'm just trying to open the sheet here. Uh, there is overconfidence bias. There is anchoring sunk costs we talked about. There is self-serving bias. A lot of times, decisions are made based on what's comfortable for the leader and not what's right for the those who are invested in that, or the customer, right? It's like, oh, if I take this decision, I'll have to be on a call with this overseas team, during the nighttime, and I don't want to do it. Or if I take this decision, it's not going to help me with the visibility I'm looking for in the organization, so let me not do that. Let me take a bad decision and let me go and get the visibility I need. Yes. So, therefore, many good leaders make very bad decisions. And something for all of you to think about. So, as I mentioned, it's about personality. Work on your personality, understand yourself really deeply, your own psychophysical nature, understand those areas of weakness, work on those things, but also build teams around your area of weakness, so that there are others who fill that gap, right? And then surroundings, I talked about. What you're seeing, what you're hearing affects you in your decision making and your thinking. And even the energy of the place was there in the ether of that place, all the thoughts and feelings and thinking and everything. It impacts you, right? So if you're with low risk appetite people, you're going to get impacted by what their thoughts is emitting into the ether, and it's coming to you. And I've written a beautiful blog on that, so you can go to my website, namitaprovit.com/blog, to get it. And for those of you who have the worksheet, I have linked it over there. Now, next thing is, let's talk about, and I'm trying to be mindful of time, and therefore I'm really quick, is crisis management. Yes. Now, when I asked a lot of leaders here about what would you like to learn, what would you like me to cover, for all those who had signed up, and I could reach out to a lot of them, is what would you like me to cover in this 5-day boot camp, and what would you like to see inside of the Lead with Ease Academy? There was a form, a lot of them filled up, and one of the things that came is, big part was self management, which we covered in day one and day two. And another thing that came up is crisis management. How can I, because a leader, a lot of times, instead of being focused on strategy, a leader is constantly firefighting because there's a lot of it. Anywhere you're growing, there is going to be crisis. Things are going to fall apart and things are not going to work. So, what are some of the things you can do to get better at crisis management? And one of the things I said is, when you're in a crisis, it's important that you communicate fast, more frequently, and with a lot of empathy and heart. If there is a crisis, people are looking at you to lead. And by leadership, they're not just looking at, and you're not going to have clarity of the path. They don't know, you don't know what path to take because it's still very recent and still figuring it out. But they don't know your path, but they at least want to know your compass. They want to know that, okay, if this person, can I trust this person? They don't know the path, but can I trust the compass and how they are managing this crisis? And that's very important. And you're able to give them that trust when you communicate well. Yes. And that even means, I don't have the answers right now, but this is the stage where we're at. The Delta CEO, during the COVID crisis, when they were making $100 million loss every day, the employees not knowing what's going to happen to their jobs, etc., the Delta CEO did a very good job of communicating on a very regular basis about the answers he had, about the answers he didn't have. Yes. And that helped the employees have trust in him. And that's what's important. I'm just looking at my notes here a little bit. Yes. So that's one thing, that communicate is very important. Acting with urgency is very important. In Katrina, you saw that Rain again wasn't able to act with urgency. Also, there was no clear leadership. Nobody knew what they were doing, and there was no action taken with urgency. And if they had, there would have been a lot of lives saved. So acting with urgency is important, even when you don't have all the answers. And now, how can you act with urgency when you don't have the answers? And I'm going to talk about, um, I think we have one more fifth point here, which is missing in the slide, but it's about knowing what is absolutely important, bare minimum to protect. Yes. And which purpose and values do you hold dear? So when you know exactly what is the core of what you're trying to protect here in a crisis situation, and what are your purpose and values, you can act with urgency, and you can take the right risks in that moment. You can make the right decisions because you know what is absolutely important to protect. What are your core values? And that helps you be more decisive and act with urgency. Yes. So you know that I can risk everything else, but this core is not riskable, and I am going to do everything to protect it. So that gives you a lot of clarity, and therefore you can act fast. If you're trying to protect everything in a crisis, doesn't work. And giving some power away, because you as a leader will have your biases, your incapabilities in being able to handle crisis, and you're also limited by your experience. Now, do you know which people in your organization are your A team? Have you made that assessment way before you've hit a crisis? So you need to be prepared with some of these things even before a crisis is. What is that absolute bare minimum I need to protect? What are my purpose and values? Organization's purpose and values. And what is that A team I'm going to reach out to when I'm in a crisis? right? And how can I give the power away and work together with them to make things happen? Yes, so that we can all derive from our own experiences, we can all act in our own genius zones and make things happen and do the right thing that we need to do in a crisis. So these were some of the things I wanted to share with all of you. A gentle reminder that the cart is open for the Lead with Ease Academy, and it's going to be open, but there is a special founders launch offer that's available till July 12th, end of day, Friday evening, Friday night, 11:59 p.m. Central Time. Yes, which would be, I think, the other part of the world, India, it would be around noon, I guess. Now, this special founders offer is available at a very special price of, depending on the tier you get, the lowest tier is at $1,900 a year, $1,990 a year, which is less than $200 a month. And in that, you are getting group coaching sessions. You are getting expert sessions with these different mentors that we have, leaders. Because one thing is coaching where you're working on yourself. Second thing is learning from different experts. The third thing is to have this beautiful peer community of leaders who are invested in each other and fully there to support each other and in their growth and in their businesses and network and what have you. The last thing is also a structured course roadmap to help you strengthen that inner core and to build at the personal level. It's a three-step signature blueprint that I'm going to share with you to build at the personal level, the relational level, and the organizational level. There are these core principles that you want to learn, and then you build your learning also further by learning from these different people. So you get all four things at a very imagine learning from the learning curve of such experienced people, getting coached by a brilliant team of coaches with me, and we've been coaching leaders for many many years. We also run a coach certification program to help people become coaches. So we have the expertise to help you, to coach you and help you achieve your goals. Yes, and imagine all of that for just $1,900 a year, or less than $200 a month. Yes, because and we have quarterly plans available too. The next level is at 6,490, which also includes four one-on-one sessions, one-on-one session every quarter, roadmap session, setting session with your coach, or which is me until seats fill up, or with one of the experts you could choose that you want to talk to. And the last one is the premium service, which is a one-on-one coaching session every single month, and that's about at $14,000. Now, if you compare the rates of all of these, there is no program like that is giving you so much value at uh, such a low investment value. And why am I doing that? Because we are starting this, and I want to get the best people in, and I want you to build this program along with us. Yes, and I want your ideas, I want your suggestions, I want to be thoughtful about your needs. And when you are in, uh, and you're contributing in this way, and therefore I'm extending a very special founding member price. The actual prices, let me try to pull up where is it? The actual prices also, let me pull up the link with for you all. So it's clear. The one which is selling at, the basic tier, which is selling at $1,900 for a year, about $1,900 for a year is actually worth a lot more. So I'm just trying to replace screen sharing here. Here we go. Yeah. Right. So these are the three tiers. When you click the link bit.ly lead with ease, and I'll just go off screen here. Yes. Right. So you have the insider tier, which is at 1990 a year, but that's at 5,900 per year. Actually, the actual price, VIP is at 9,900 a year. There's a lot of value in that one-on-one space that you get with all the experience that's available, and all the coaching that's available. And it's like people usually have a coach and mentors like that at at least at a $10,000 to $20,000 retainer per month. Yes, but here you're getting it at 6,400 per year because we're putting like everything at once a quarter, and the actual price is around $10,000 a year. And the inner circle where you're putting them every month, and I said there you have all these experts available to you. Usually the retainers are 10 to $20,000 a year, but in this case, we're giving it to you at $15,000, 14,400 for the entire year. That's a monthly price. So for those of you who are interested, it's your time to join. These prices will never be at these levels after Friday evening Central Time. I'm also doing a live Q&A because this medium is more streaming, so I'm not able to get your questions and you're not able to get your questions answered. So I'm going to be doing a live Q&A tonight, Thursday evening, 9 p.m. to 10 p.m. Central Time. And for those of you who have registered, will receive the link. And for those of you who haven't registered but are getting very excited about joining the Lead with Ease Academy, want to know more, DM me wherever you're watching, and we will make sure that you get that link where you can come there and get your burning coaching questions answered, all this training that you have been receiving, and to also get your um, questions about the Lead with Ease Academy answered. How is it going to work? What's there? How many sessions? Right. And off the top, right off the bat, I'll tell you it's 2 group coaching calls a month. It's unlimited access to the community connections. It's and learning from each other, as Mukeshji was talking about. It's a courses roadmap, and it's at least one expert session every month where you get to interact with them. This was live streaming, but that's going to be more like a Zoom session where you can interact with them, get your questions answered, get insights, share your plans, get their feedback, and so on. And we have expertise in leadership coaching, helping people rise in their careers and rise in their business, rise uh, in their growth in their organizations. We also have experience in leadership coaching for those who are entrepreneurs. So we are for both those who are senior leaders in big organizations or those who are running their own organizations. And through expert coaching with me and my team, and through these expert mentors, you're getting access to how do you figure out the whole venture capital scene, and just get continuous feedback on that. How do you start some of these boring businesses and run things? How do you manage everything together and still and be consistent and go on and on? You're getting a lot of value for at a very small price, and I invite you all to join. For those of you who miss it, you're missing something of great value. So I look forward and I invite you to join before Friday evening, Friday night, 11:59 p.m. Central Time, so that you can get all of these things at a very small investment value because you're committed to helping us grow the Lead with Ease Academy with your insights, with your feedback, and with everything else that you need. And we're going to make sure that we shape the program for that. And therefore, we're inviting you to at a special founders launch. The cart will be open, but the founders launch will be off after Friday, 11:59 p.m. Central Time. So see you and bye bye. And I'm looking forward to seeing many of you inside. And I'm looking forward to seeing many of you in the evening in the live Q&A session, which would be a meeting link where you and I can talk, and we can group talk, and and also experience what the group